Greetings and welcome back to The Pride. My name is Muphasa El Matador. They call me the Curious Cat. My job is pretty simple. I help grow your conviction. Conviction to buy, conviction to sell, conviction to hold. And today we're looking at Corning, GLW. Corning is Godzilla in the material sciences industry. You already know out here in The Pride, we only invest in trends that are going to last the next decade or more. Corning's products have multiple applications that are tied to our everyday life. From our television sets, which we love and buy almost every time there's a sale, these are produced quite literally using Corning's tech. Corning owns 3 out of 4 of the Gen 10.5 plants in the world that shell out our 65 and 75-inch television sets. On top of that, the wearables that you see, these glasses in the video, are created using Corning's specialized glass technology. Without these wearables, augmented reality is going to be clunky and filled with all the tech that we currently have that we don't like. But having glasses that are cool and wearable in our everyday lives makes it more real to enter into the metaverse day to day without having to worry about what's on your face. On top of that, 5G technology literally depends on Corning's fiber optic cables, and they have literally long and laid out deals with our network providers to lay out these cables all around the world. I'm going to be breaking out this particular company over the next few minutes. Stick with me, but first I'm going to do a recap of AMT. Last week, I think 2 weeks actually, we jumped into AMT at $228. Right now, AMT has left our buy up to price, which was set at $237. While everything else in the market is heading into the toilet, you can see that AMT has shown a lot of strength over the last 2 weeks. It's currently sitting at $238. We have a resistance of 295 for those of you who are short in the profit team to take profit. If you're long like me, we're rocking with this one for the next 5 to 10 years. I have stopped buying AMT, and that's why I'm bringing this up. AMT, if you want to see everything there is to know about AMT, hit the video in the link above. With that said, let's finish up GLW. So let's talk about the moat around Corning. I believe Corning has a superior competitive advantage to everyone else in the market. They also have amazing management of their debt, with the best debt in the entire S&P 500 when it comes to the length of maturity. I believe that they will have a high return on investment for the cost of capital applied. Now, I'm going to break out the segments that I find interesting when it comes to Corning's. They operate in 5 different segments: optical communications, display tech, environmental tech, specialty materials, and life sciences. Over the last 170 years, Corning has continued to innovate. Consequently, they are dominant in 4 out of the 5 segments I mentioned, with life sciences being the only segment that they're lagging behind. I'm going to touch on specialty material segments, which only accounted for 14% of 2021 sales. A majority of that sales was in the marquee Gorilla Glass. The marquee Gorilla Glass has an exclusive arrangement with Apple for ceramic shield. Gorilla Glass is the protective cover that is on our smartphones, and these are on 75% of the smartphones in the world. 75% of the smartphones in the world use the Gorilla Glass. This all started when Steve Jobs in 2006 contracted Corning with 6 months to deliver a cover glass for the first iPhone, and they delivered. Since then, they have continued that relationship with Apple. You can see in the article, Apple invested another $45 million in Corning. This is bullish for any company because I believe that down the pipeline, Apple is going to present or announce the eyeglass. And who do you think is going to be producing the glass for the eyeglass? Now, that's just one. They have another segment that I find very interesting. Corning actually invented the fiber optic cables in 1970. That is amazing because this tech has continued to revolutionize our communications industry up till today. It also accounted for 31% of the sales, and this is the biggest section in Corning's revenue going forward. 5G is a big part of our lives, and fiber optics brings that to reality faster than any one of us is going to be able to blink. Second largest segment is display tech, with 26% of 2021 sales being actually generated from this segment. Another amazing segment that Corning is at the forefront of because they use fusion tech. Fusion draw is what is actually called to design the glass for our 65 and 75 inch television sets. These glasses are actually made without any of the components touching any materials until the glass is fully formed. And this reduces surface imperfections around all of the manufactured material. Super bullish for Corning, and this is why I think they are very different from the past and set to continue to dominate as long as the company stays innovative and handles their debt in the proper fashion. So I like to take a stab at the bearish argument. The first one I want to talk about is the high capital involved in this particular business. Free cash flow is a big deal when it comes to evaluating any company's future value. And when you look at Corning's, with huge investments actually required, $7 billion, I believe, is required to build a plant. What I do like is they require 75% from their clients and partners to build these plants. And they do 10-year contracts to ensure that that supply is consistent for the next decade. So yes, it is capital intensive upfront, but the business is structured in such a way that as long as they continue to deliver on their innovations, which is also a big challenge, if they stop being innovative, then the company loses its value quickly. If the competition can take that market share and dominate just as well. When it comes to their customer base, they are highly concentrated with the Apples, the Samsungs, and if they were to lose any of these relationships, it would hurt the bottom line big time. The bullish case for Corning ties into the core values and the core business. I believe that Corning is going to continue to dominate in the four segments that it currently holds market leader position because their innovations and their partnerships are pretty solid. Their portfolio is also aligned with the global trends that are going to be here over the next decade. We're talking about connectivity as well as efficiency. And they have the longest average time to mature for their debt. Of all the companies in the S&P 500, Corning is positioned to dominate over time. This liquidity would allow them to continue to do their R&D. They have a new CFO in place. Their earnings last quarter was really, really good. And moving forward, they have projections for 3.6 billion in the first quarter and 15 billion for the year. If they hit these numbers or surpass them, there's no stopping Corning for 2022, 2023. Every investment comes with risk. No risk, no reward, but understanding your risk allows you to have intelligent patience and to set up a plan. When it comes to Corning, we've already reviewed the risks that are associated with this company when we looked at the bearish case. I'm going to highlight two of them and the major one first. The major one is the fact that $3 billion of revenue from this company is coming out of China. So if there was a geopolitical tension like what we're seeing with Russia and Ukraine coming between the United States and China, that would definitely slow down the bag from coming through on this end. The second thing is innovation. If Corning was to slow down in its innovation and stop being market leader in its four segments, then you could see the risk of someone else swooping in and taking that space. However, because it's highly capital intensive to operate in any of these particular segments, it's hard to see a disruptor coming in and switching things up anytime soon. but it's worth knowing that this is something to think about. The final is the fact that most of the revenue comes from the display segment, and the clients that they have are already entrenched. If they were to lose a client like Samsung or Apple, it would hurt the stock price big time. And so these are things to know and to think about when sizing your position. Besides that, I'm going to jump into the financials, do the technicals, and wrap up the video. Cheers. Using Google Finance to see how this thing has been trading. From 33.93 to 46.82, I currently hold shares at $34 and $35 of GLW, and I'm holding it for the long term. They pay a decent dividend of 2.78%, and there is news that the dividend is going to be increased. The market cap of $32 billion, this is a huge company. However, the PE ratio is not exciting at 30.39. That is cause for concern. On any stock, a high PE ratio is not good at all. When you look at their earnings, you can see that earnings has continued to grow, even though not astronomically. You can see that at least it's holding steady when it comes to revenue. Net income has continued to wobble, but they did beat their last earnings. Net profit margin of 13.25% is pretty decent. I like a lot of things about this company. Net change in cash, that is something to explore to see why that is going down. But besides all of that, the last earnings was pretty decent. I'm going to be digging deep to see where the value lies in this particular company. So what I do is I go in and I try to explore what the analyst is saying. Current price of $38, and analysts giving it a $40 price target on the low, $51 price target on the high. You can see anywhere from 3% to 30% upside on this particular trade. I think that holds some value. The PEG ratio gives me some confidence with regards to the PE ratio, because this is factoring growth. The price to earnings growth ratio. 1.83 is not bad. You want to see one, I would say most of the time, but 1.83 shows that the company does have a future ahead of it. And if the numbers continue to come out dominant, you can see that PE ratio come down. We're looking at a couple of billion being expected, 15 billion by the end of the year, 3.6 by the end of the quarter. A good forward guidance gives us a lot of confidence to hold this stock and hit those price targets of $40, $46, even $50. And with the years coming and new announcements coming from Apple, I have a lot of confidence that GLW will definitely stick around for the long haul. With that said, I'm going to jump in and look at the technicals. I've been holding GLW for a really long time, and I have loved this trade. I continue to make money coming down and going up. If you want to see how we make money in our options plays, hit the Patreon link and come join us on the Profit Team. We're an amazing group of individuals. We trade, we invest, we research, we do the simple things consistently. With that said, we have support here at 35.67. Every once in a while, you might see it break below. You know, when they panic, we pounce. So we load the boat at $35 or below. Earnings came out once it broke support at $35, and the earnings were super bullish. Consequently, the stock went all the way to resistance of 42, broke 42, and crashed at 43.69. It's now chilling below the 50 EMA. Good time to nibble if you're going short to head back to 40. But if you're going long, I like to pick this up around the 35, 34 level. We're currently at war, and trend is your friend until it bends. So we are looking at seeing this bleed down to the 30. And if we see it at 30, we're just going to pounce on that thing and buy it long. I personally am looking to see GLW break through 46. Turn 46 to ice, and then bounce all the way to 50. Remember that I'm picking these shares up because I'm getting paid dividend. If you pay your boy to hold, your boy is going to hold. If you like content like this, hit the like, smash the subscribe button so that you get notified every time we drop a video. We release videos like this every week. We also release our day trade momentum series every single day that the market is open and there's momentum. So if you like to trade, come rock with us. Come see where we're picking up money in and out. But our long-term plays are right here. With all of that said, it's Muphasa. Peace.